Good morning, guys. I hope you all are doing well. I hope you all have made your quota of money this week. So, today I've been asked to show how I draw my support and resistance zones. So, before we go there, what is important, or rather, before we learn that, what is important is that one has to understand how, or rather, where the market is heading, whether it's an uptrend or whether it's a downtrend. All right. So people have different ways of gauging this, but I use a method called zigzag. Right. So basically, I connect the high highs, high lows of a particular price, and I try to gauge whether the market is on an uptrend or a downtrend. All right. So it's very simple to do that. Now let's imagine if this is one candle, and the very next candle forms here. All right. So you can clearly see this is the high of this candle, this is the low of this candle. Likewise, this is the high of the second candle, this is the low of the second candle. All right. So you can easily see the second candle has made a higher high, as in high compared to this is higher, and a higher low. Low compared to the previous candle's low is higher. All right. So when you compare these two candles, you can see price is making a higher high and a higher low. Okay, so let me just let's see if we can use the right over. Let's say if we mark this as high and this as low, the second candle is making higher high and it's making high lows. All right, so you can clearly see over here price in the second candle is making a higher high, as well as the low is higher than the previous low. All right, so this trend in price is showing us that price is moving up. It's on an uptrend. Okay, so another candle forms here, price is making, as you can see, a high 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 low. Another candle forms something, let's say like this, but as you can see price is still making a higher high as compared to this high over here. Okay, so the trend, if you join the dots from this candle to the very last candle, this is how it would look. Okay, it will be a single straight line because price is making higher high higher lows. Okay, now let's see if price in the very next day the price opens here and closes within the range of this candle. Okay, see, it's opened below its high and it's closed also below its high. Okay, there is no wick down. Okay, price, the range of this candle is within the range of the previous days. Okay, or the previous candle, whatever time frame it may be. Okay, for this particular example we consider this as a daily time frame. Okay, so the high or the entire range of this particular candle, the fifth candle, is within the range of the fourth candle. Okay, so price for us has not moved anywhere. So days like these, or let's say even if this is the 5 minute time frame, this particular candle is of no use for us because it's not giving us any information. People might consider this as, candles where the uptrend is coming to a halt and all that. I don't know, it could be, it could not be, but for me this particular candlestick is not giving me any information. All right, now the very next candle, if it opens here and closes here, okay, let's see, let me just give this a, okay, forms a red candle. Now see, the high is here, the low is here. Okay, this high is lower than this high. So let's say if this is, as before we had mentioned, high, this is the low of this candle. Okay, okay, now this particular candle is making a lower high and a lower low. Okay, so lower high, why? Because this candle's high is lower than the previous candle's high. Lower low, why? Because this particular candle's low is lower than the previous candle's low. Okay, now we see a change in direction. All right, so then when I draw, I will draw from here high of the, the last high candle, the high from that to the low of this candle. All right, and so on and so forth. This is how I draw my zigzag lines. Okay, this is how I draw my zigzag lines, connecting the higher highs to the lower lows. Okay, now for example, just for this particular example, let's say if price continues going down. Okay, let me just take this out. I would extend this all the way down till here, because from this candle the price has been making lower high, lower low, so trend is moving downwards. All right, so this is how I draw trends. Get it? Okay, so when I see something going up making higher high, higher lows, for me the trend is upwards. When I see something going down making lower highs, lower lows, for me the trend is downwards. Okay, this is the basic that one needs to understand. Okay, now let's look at the chart for natural gas. Okay, I'll share with you guys how I draw the lines. Well, let me just take this particular thing out. Okay, so let's say we start from this low. Okay, the low of 25th of April. I start here. From here we see it's making higher high, higher lows. Okay, all the way till here. Okay, why? The 2nd of May candle, that is this candle, one can clearly see has made a lower low and a lower high. So price comes down, and from here again this candle starts continuing making higher high, higher lows. Okay, okay. Now for a moment, see this candle, the candle of 7th of May. It's neither touched the high of the previous candle. It's neither. Okay, let me just mark this for you, just for your reference. You see this particular candle, this candle, 7th of May. You can see it's neither touched the high of 6th of May, neither touched the low of 6th of May. Alright, so this candle 7th of May has not given me any information. Looking at this candle, I cannot say what the market is doing. But if I look at the history, price is making a higher high and a higher low the last 3 days till the 6th of May. 7th of May, it's not showing me anything. Alright, we look at the next one. What's price doing from here? Has it made any lower lows? No, it's not. It's continuing going up. Now you look at this candle, 9th of May. 9th of May has broken the high of 8th of May as well as it's touched the low of 8th of May. It's basically touched both the ranges of the previous day. On such days, I would consider what the previous range was. All right, if the market was going higher, making a higher low. Okay, I would continue using that. Okay, I would not mark the high as well as the low. I would not do this and then continue going on top. No, it doesn't make sense. So on days where both highs and lows are touched, okay, we will continue the trend that we were using earlier, or we will continue the trend that has been ongoing since the time we reached there. Okay, I hope that's understood. Okay, so price is making higher high, higher lows. It's again over here, higher high, higher low, higher high, higher low, all the way till here. See again, 22nd May, it's touched the high of 21st May as well as the low of 21st May. Okay, so I'm not going to draw it like this because it makes no sense. I'm not going to touch the high as well as the low. No, it makes no sense. Okay, so when you come across days like this, just make sure that you continue the trend that was earlier. Okay, in this case we were on an uptrend, we will continue with the uptrend, so hence we will touch the high only, we will not touch the low. Okay, now price reaches all the way till here. Now from here you can see price started making lower highs, lower lows, lower highs, lower lows till here. Now again from here price has started moving up, high high, high lows till here, then it started making lower high, lower lows. Then see this particular candle has made the high as well as the low, so I will continue going upwards only. All right, high high, high lows all the way till here. Okay, and then from here I will start making lower highs, lower lows till here, then higher high, higher lows till here, then all the way lower high, lower lows, higher high, higher lows, and so on and so forth. Okay, this particular practice is very, very, very important. If you cannot gauge where, or rather what the trend is relevant to that particular counter, then one can never make a clear judgment on whether one needs to go long or go short. Okay, so let's look at this particular trend from here, from the 1st of May till the 23rd of May. Now imagine market is making higher high, higher lows. Okay, why in a market like this would you want to be on long on this particular market, or would you want to be short on this market? Obviously long, right? Because that is where one has the maximum chance to make profit. If you would have gone short over here, you would have been murdered by the time it reached 22nd of May. Okay, you would have lost tons of money. So that's why you always have to be with the larger trend of the market. We might be trading intraday, we might be taking a short swing trade for a couple of days, but our trade has always got to be with the larger trend of the market. In our case, on the daily time frame, what the trend is. That is going to be relevant to a day trader like us. See, these 2 days market might have come down. From 23rd May, 24th of May, till maybe till 27th of May, market came down. But then it went back up. Came down again, and then it broke all the highs. It even broke the previous high of 23rd May. Alright. So the larger trend on a daily time frame is up. So we as day traders will look for trades on the long side. We will not take a contra trade. That is where most of retailers like us lose our money, and that's where I personally have lost a lot of money at the initial stage of my uh, trading career. All right. So finding out what the trend is on a larger time frame, in our case the daily time frame, as you can see here, is very, very important. Now see, the market made a high on 12th of June. Okay, and then the market started coming down, made a lower low, tried to make a higher high, but you can see market never reached and touched the last high. In fact, the market broke the last low. See, this was the last low made, this was the last high made. What did the price do? The price tried to go on top, but it came and broke and closed below the last low. So what is the market trying to tell you here? The market here is trying to tell you that, okay, the time of going long is over, because now the price is showing, or rather is indicating, that it wants to move down. All right, see over here, market made a high. This is the high. Then this was the last low that the market made. Correct. What did the see? This is the high made. This is the low made. But what did the price do? Has the price continued on the uptrend, or price went and broke the low? It it continued, right? It went and in fact broke the high that was made on the 30th of April. So what is the market trying to indicate over here? The market is letting us know that the price still wants to go up. The price still has the power to continue with this uptrend, and that's exactly what it did here. Now see, price came all the way till here. It made a high. Then it started making lower lows, lower lows, lower lows, and this was the last low that was made before higher high started, right? Okay. So what did price do? It went till here, then it started falling down from here. Okay, it didn't go all the way till this high, it started falling down from here. Now this will give us an indication ki yaar, maybe price is looking to go down. It doesn't seem to be very strong over here because it hasn't gone all the way till the last high. Okay, it's showing indication to come down, but I would not be negative. I'll be negative only if price would have continued going down, like from here price would have continued going down like this. Then in this rebound I would have tried to short the market. But here what happened? price did come down, but it didn't come all the way down to this low. It came down from here, and then from here it continued going on top. It broke this high. So after breaking this high, I'm still okay looking for trades to go long. All right, price goes up, comes down here, goes up again, and then what happens? It breaks this low. When price breaks this low, price is telling me, okay, I'm running out of steam from going long. Most probably price might want to start looking to come downwards, and that's exactly what price has done over. You see, it's come lower low, lower high, lower low, lower high, lower low, and over here you can see price has started making a higher high. Why? Price broke its previous high. But then again, what did price do? Price must have broken this high. Okay, this is the first time this is making a trend, what, a low high low low trend, right? Okay, this is the bearish trend. This is the first time it's trying to break the bearish trend. When this happens, you don't immediately go long here. Okay, there are certain areas that we will mark as support and resistance that which I will teach you later. We will start going high, or we will start shorting the market from those zones. But I want you to understand this. I want you to first understand how to draw this and understand, okay, what is price trying to tell you? You know, when people come and ask me this question, do you think that price is going to rebound from end of April or not? I wouldn't know that. I would only come to know if price is showing me this indication. When I say price, I'll come to when price gives me that indication. This is what I mean. This is what I actually mean, that once lower low, lower high is being formed, and when price breaks the high of the previous lower high, that is an indication what price is giving me. Okay, boss, I might want to change the trend from bearish to bullish from here. Might, I'm using the word might. It's still not a confirmed signal. Okay, now if price would do this, from here price goes here, comes down, and then breaks this high that has been drawn. This was the first high that first lower high it broke. So it came from here, broke this lower high, comes down, then comfortably breaks this high too. Okay, so if it let me just take this. This is the wrong example. Let's take this example only. Price comes down, breaks the first lower high, goes here, comes down, and now if price comfortably breaks this high, the last high that was made, then one can think, okay, you can be sure that, okay, I can take a long position from here itself. But what has happened here? Price tried to break this high, came down, and what did price do? It broke this low that was created here, this particular low. See, price came up from here, price came up, broke this last high, made a lower low, then with the 14th of August it made a higher high, higher low. While doing that, it broke the last high, correct? But it's not closed above it. If it would have closed about it, then maybe yes, I would say, okay, it's a very good sign, we can try to go long here itself. But price came down and broke this low. So price is again showing me indication of falling down. And that's exactly what happened. See, price came down, went up, boom. And from here it's jumped up again. Now, why price jumped from here, why price fell down from here, that I will teach you later. But I hope you get this. You need to learn to draw this, the high lows. Once you draw, like let me just try to mark this here. See, this is a higher high. This is a higher low. Okay, so and you're going to continue marking this. Where was the last high high made? Here, high high compared to, and did it make a higher low? Oh yes, it did over here. Okay, now what has happened over here now? Over this part, it's made a lower high. Yes or no? So what we do, we get this down here and we mark this as lower high. Okay, but what about the low? It's not made a lower low, it's made a higher low and the market continued going up. Okay, if the market came till here and came down and broke this higher low and made a lower low, yes, then I would consider to short the market somewhere on this level. But since market didn't even come and touch this, it came till here and shot back up, making a higher high and a higher low. For me, the market is still on an uptrend. Now, for here is the first time where the market has made a lower high and a lower low, and then again lower high here, and then lower low here, and so on and so forth. Okay, so it made a higher high, it made a higher low. Why higher? Because compared to the last high, this is higher. Even compared to the highest point before that, it's still higher. Why higher low? Because compared to the last low, this is higher. Therefore, higher high, higher low. Then market went up, came down from there. Hence, it made a lower high. It came down and made a low here before it climbed down top. Hence, this is the lower low. Market climbed down, made a high till here, and then fell down from here. Therefore, this point will be lower high because this high is lower than this. And market fell all the way down here before it climbed on top. This became the lower low. So on and so forth, you mark. So you need to mark like this on a chart. Okay, try to do this on a daily time frame. You can do this on any time frame, but nothing below half an hour, 15 minutes, 5 minutes time frame. It wouldn't make sense because then you'll have so many points on the chart, you'll get confused. So best stick to the daily time frame. Draw this on the chart, mark this on the chart, get an idea what exactly is the trend of the market as of today on a daily time frame on that particular counter. Then open the 5-minute chart and see what you want to do. Okay, that we'll speak about later, what we need to do and how we need to do, where we need to short and where we need to go long, or rather way to draw our resistance and support lines, or rather way I draw my resistance support lines. That we'll speak on a later time. But this I want you to understand. If you can get this, it's very simple. You don't need any indicators or anything. Okay, just draw the zigzag lines. It's so simple. And once I tell you how I draw my support resistance, and you can try to use that on any counter, any chart. It could be equity, it could be commodities, whatever it is. You will see how price reacts to those levels. I'm not saying it works 100% of the time, but then if you take trades from those levels, you minimize your loss making potential and you maximize your profit making potential. So as a day trader, I'm not trying to make a system where it's 100% foolproof and where I will not make any loss. Impossible. That's not going to happen. I will make losses. But what I can do is that I can minimize those losses. Okay. Now, let's say price is making a downtrend over here. Okay. Price is making a downtrend over here. I know the trend is down. I know I need to go short. But where do I go short from? All right, because let's say price is coming down here. Okay, price is making lower low. Okay, we need to take short position, but where do I do that? If I take a short position here, market goes on top from here, then I'm screwed, right? Let's say from here till here it's like 8.3%. You're gonna get screwed, right? So you need to know the location from where to go short, because let's say if you'd have gone short over here, okay, let me just do this. If you'd have got short over here, even if the market went and broke the previous high, that's still a 4.2% risk as compared to an 8.2% risk. See, there itself I reduce your risk by half. 4.2 is also very large, all right. But just for this example, where is 8% and where is 4%, right? So that's what we as retailers need to understand and need to learn is where exactly do I need to place my trade? Where exactly do I need to get into a trade? You just blindly cannot, see the chart and oh, it's on a downtrend and let me sell over here. No, that's a recipe for disaster. Okay, so I I explained this reasonably well. If you guys have any doubts, as usual, give me a shout out and we can discuss this further. All right? Cheers.